Hello everyone, and welcome to today's webinar. I'm Diane Della, Senior Tax Manager at Tax Assist in Norwich at the support office. I work with colleagues across our network, and we have clients numbering about 80,000 at the last count, so you can imagine that we see all types of businesses, individuals across that large number. So employment tax is something which is often relevant. For those who don't know Tax Assist, that's who we are, and we're a national and now increasingly international network of accountants. I'm joined today by my colleague Claire Ellis, who is also a tax manager in our consulting team based here in Norwich. We have a separate payroll team as well, who run payrolls for people, but Claire and I were the ones that were involved with P11Ds in the summer for employees, so today's content is relevant to us, and a lot of what we do is related to incentives for staff, particularly on the share schemes front. So these are challenging times indeed, and employee incentives may seem slightly an unnecessary thing to worry about at the moment, given you may well have had to take the view that actually everyone that's got a job is lucky to have a job, and that's actually a perfectly reasonable attitude. On the other hand, we are hoping that there will be some kind of a recovery in the new year. One of the big four, I think yesterday, Deloitte said the news on the vaccines could turbocharge the recovery, and we'll wait and see. Of course, a no-deal Brexit could have just as damaging an effect, so we do all have to be very kind of fleet of foot at the moment, I think, to react to changing conditions. There's obviously going to be a lot of pressure in the jobs market as well if people are made redundant, and of course the sad news from the retail sector this week is a salutary reminder of what may be around the corner. So if you have employees that you value, you certainly want to keep them engaged with your company, because the risk of losing them could really cost the business at the moment, and all businesses depend to some degree, greater or lesser extent, on the quality of their workforce, particularly if you're in the service sector. And if, as a result of the pandemic, your business has changed for the permanently for the long term, that you won't ever be going back to acting the way you were before, then with the increasing online for the retail sector, for instance, then you do need employees who are engaged and who are ready for change and able to react to the inevitable changes that are coming. So employee incentives can be important. I'll put a few kind of thoughts really on this slide. So unfortunately, you may have had to make some redundancies, so changing workforce can impact whatever incentive program you had in place. Performance targets may have become completely irrelevant over the course of the year, because if they've become simply unachievable, then it's hardly fair to penalise staff. But again, maybe we come back to, well, put everything on hold and discuss with staff as you go along. But tax issues we can't overlook. I think really we're at a point where tax can't be wagging the commercial dog's tail, as it were. But nonetheless, it is important and mustn't be overlooked. And so there's inevitably going to be some mention of that, because tax is what Claire and I do anyway. Maybe you had a share scheme which was geared up to an exit, and you were anticipating selling your business within 2-3 years, and part of the way of incentivising your staff was to have them have shares in that scheme and all be in the exit together. And of course that may have become a much more remote prospect. So in terms of looking forward, engage with your employees and talk about what is the future business strategy, so that everyone rows in together at this difficult time. So if you've got existing incentive schemes, do you tweak them a bit, or do you just say they're so irrelevant and out of date that we replace them with new ones? That's a decision that has to be made on a case-by-case basis. You couldn't possibly say what was right for your business. Maybe you need to defer bonuses. I think if that's the position you're in because of cash flow difficulties, do talk to employees as well, because they may well have been relying on cash at the end of the year, and if it's not going to come, the sooner they realise that and understand why, and you'll talk about how you can compensate in the future, then that's going to help your position with your employees. And importantly, you do need to make sure from a tax perspective that you actually defer the tax point as well, because it would be awful to get to the position where you don't pay the bonus, but because of the way it was contractually written, you're still due to pay the tax, or in other words, the employee is still due to pay the tax. Someone's going to have to meet the bill, so you don't want to be in that position. If you've got more sophisticated incentives like a share scheme, then it may well be that you have to think about changing the performance hurdles that are written into the scheme. And you do have to be careful here in terms of the tax impact. It's unlikely that what you do would be a disqualifying event unless you actually try to take away the options altogether. But the sort of thing you might do is remove a forfeiture clause from a share scheme package, and that could create an income tax charge at that point. So that wouldn't be relevant if you have signed the appropriate election at the start of the scheme to lift all restrictions and be taxed accordingly. This is getting a bit technical, but if you've got a share scheme, that may sound familiar. So be careful there, and that may be something where you do need to seek advice. If your business strategy going forward is changing, then incentives need to fit with that. And so addressing all of this has to be done in the round. If you had wanted to award shares to individuals, for instance, but even with minority discounting, the share price was prohibitively expensive. Well, if regrettably your share price has gone down, the value of your company has fallen, this might actually be the opportunity to issue some shares to staff. So again, you need advice on that, to think about how that could work for you. But this might be the time. Sometimes there are good things that come out of difficult situations. Share schemes are a relatively sophisticated way of rewarding staff, and they're certainly more for the longer term. And at the moment, everyone may be just concentrating on surviving, and therefore short-term rewards might be where you are pitching yourself more. So that, again, is something that management have to decide amongst themselves. If we think about short-term rewards, then we can look at some of the things which the tax system is already set up to provide. So trivial benefits. This was introduced from memory, 2016, about then. Prior to an official trivial benefit limit of £50, there was no clear amount for trivial. So we tended to think that if you were given a turkey at Christmas, that was the value that was trivial, because the revenue had unofficially, as it were, said that those sort of things would never be taxed. And so we were stuck at around £25, £30, but then they came in with the trivial benefits legislation and put the figure on it of £50, which was slightly more generous than we might have perhaps described trivial as. So you can give someone something which is worth no more than £50 without it being subject to tax, provided it meets the inevitable conditions. And there are 4 conditions. So the item mustn't cost more than £50 to provide, as I've already said. Also, it mustn't be cash or a cash voucher. Cash is always going to be taxed as pay. It doesn't matter what you describe it as, cash is cash, and it will be subject to Payee and NIC. And a cash voucher is the same thing in effect. So it means a voucher that you can convert into cash, not the usual sort of retail store voucher for Next or something, where you take, by a tortuous route, you could end up converting into cash, but that's not the purpose of the voucher. If you return goods and got cash back, but that's not what we're talking about here. So non-cash vouchers are essentially vouchers that buy stuff, and a cash voucher is one that can be converted into money. Then there's the issue that it must not be contractual. Some of these rules are quite sort of loosely written. They haven't really been tested in the court, so we have to interpret them on good practice and looking at HMRC manuals. Contractual can mean express, as in a contract, or it could mean implied. And at the start of the trivial benefits regime, it wasn't clear what the £50 per person, for instance, meant. Did it mean £150 each? It transpired that it meant every time there was something which was a qualifying trivial benefit, you had to just be below £50 and that would be fine. So I've got some examples on the next slide. But there are things you can do that might come within trivial benefits, that if you started doing them very regularly, for instance, if you always gave if you contrived a way to all have a meal at the end of a month or something, and you could get that within the rules, then arguably if anyone starts working at that business, they're going to anticipate that will be the case. It becomes an implied term. So contractual is a quite widely drawn term. We need to be careful of that. So anything on a regular basis is going to potentially become contractual. The really key one here, though, is that it mustn't be a reward for the work or performance of the duties of employment. So that means that immediately you can't, you knock out things like salesman of the month, salesperson of the month. You can't, that's rewarding someone for doing their job. So anything which is rewarding a person for doing their job is going to be outside these rules.
Like a Christmas gift.
Exactly. So a gift that relates to an event in the year, you're absolutely right, would be exactly the right kind of thing, or birthdays. And in practice, we'll move on to the next slide because we've got a few examples there. So as Claire says, a Christmas present would be completely fine, and that comes back to the original kind of Christmas turkeys, alcohol, chocolates at Christmas from the employer. And you could also give a voucher for a Christmas present, and so that's also fine. They actually changed the rules on vouchers because there was some complication about Class 1 national insurance previously. So Christmas presents or birthday presents, or if you happen to be unfortunately unwell or have a child, any of those kind of events that have no connection with you performing the duties of your employment. And it's £50 per item provided. There was a comment on the other slide that if you're a close company, so that's a company under control of 5 or fewer individuals, you can't have £50 willy-nilly, as it were. There's a limit for the year of £300. So that means, in essence, 6 occasions of £50, and then you can't have any more. It's directors and family members, so associates would be added together unless they're all independently employed and properly carrying out duties of employment. And if the limit's exceeded, then the whole item is taxable. So you can't give someone a voucher for £60 and say £50 is exempted and £10 is taxable. Now, that isn't how it works.
You could do, say, 2 £30 gifts.
You could.
At separate events.
Indeed, you could. So where companies were accustomed to giving a £100 voucher and dealing with it under a Payee settlement agreement, which we'll come to in a bit, as Claire says, you could give £50 on one occasion. So you could have a £50 voucher at Christmas, and then you can buy someone a very large Easter egg or give them a £50 voucher at Easter. So you can't say that either of those things relates to the way they carry out their duties. So there are ways you can plan around these rules. If you are accustomed, for instance, to taking out employees for lunch when a new member of staff begins, well, if you say on the morning that the person starts, everyone who's in today, let's all go for a meal, I don't believe that that's going to be outside the rules. I think that could be covered by a trivial benefit. Of course, if you're eating in London, £50 buys you less in terms of food and drink, but nonetheless, that's doable. And I think everybody who happens to be at work that day is not being rewarded for performing their duties of work. They are simply on the payroll, and I think we can make that distinction. So there is a bit of scope for planning, if you want to call it that, around these trivial benefit rules. But they can be very useful, because in the past, if you gave someone something which, whatever we all decided trivial was, if it was more than that, then the individual would have had to pay tax on that item unless you went for a Payee settlement agreement, which is the next slide. So these can be very useful. We don't tend to see them too much actually at tax assist for some reason, perhaps because the business is just very small and it's not deemed necessary. The example I always quote of this is, if you want to reward your employees, you want them to have a feel-good factor. And the feel-good factor probably doesn't include having to pay tax on the thing that you thought you'd been given in the first place. I used to work for someone who was very keen on Watford Football Club. I'm not great on football. Watford is definitely not a team I follow. And if he had said to me, let's go to the football, and bought me a ticket to see the match, and I was going to get taxed on that some months down the line, I wouldn't have been too chuffed. So this was a method, and still is a method, whereby you can cover off things that you give to employees that are not otherwise exempt under the rules for income tax. The rules on when you agreed a PSA, as it's called, used to be a bit stricter. It used to have to be before the start of the year or during the year, but now you've got until the 5th of July, certainly for the first tax year, in which to apply for this Payee settlement agreement. And that can be useful because obviously things happen during the year that certainly no one anticipated. The pandemic, did they, this time last year? We were all blissfully planning for 2020. And so things change, and it's a more flexible system now. So if you think after the event, well, actually, we really should have applied for one, but we really want to give the employees something now, which would be outside the exemption for trivial benefits, then you can still apply after the tax year. You can do a roundup of everything that you've awarded to employees and put it all on the PSA at that point. So the types of benefits that can be included within this, you have to agree those. Agree them. You have to decide what you've included. Going to include usually it's things around entertaining, so meals out, that kind of thing is not going to be covered.
A gift on retirement, they could.
It could be, yes,
because something on retirement.
Because we've got a comment about long service awards later, but that may not be relevant. You're absolutely right. So retirement gift could be something you could cover, because it'd be a bit of a kick in the teeth to have a gift and then find you have to be taxed on it, wouldn't it? So somewhere down the line. And also retirement gifts are always a bit difficult because in effect you're rewarding someone for what they've done in the past. So it's difficult to find a way to call that exempt because it's almost always going to be rewarding past performance, isn't it? Almost by definition. So exactly that kind of thing could be covered. Once you've worked out what it is that you want to put on your agreement and you submit that to the revenue and they say, yes, you can include all of those things, you have to do a calculation as well of the tax and national insurance. What you have to do though is you have to gross up the item. So if the item cost £80 and the individual is a 20% taxpayer, then what you are calculating taxes on £100 and the employer's national insurance, which is called Class 1B this time, not Class 1A or Class 1, is calculated on that £100. So it does mean that you're grossing everything up. It is much more expensive for the employer, even more expensive if they are 40% or even 45% taxpayers. So all of that you have to bear in mind. Yes, you can get around the individuals paying the tax, but to use Claire's example, a retirement gift, if that was a highly paid individual in the company and then they have a retirement gift at the end of several £100s, you could be quickly looking at a four-figure sum when you started off thinking it was about 500 that you were buying the gift for. So you need to be aware of all that before you go too merry with a company credit card. But it does mean that the employee has no tax, national insurance to pay, and that is the better way to reward the individual, clearly. The tax and national insurance has a delayed payment date. So unlike with P11Ds, where you have to settle everything by the 19th or 22nd of July, for a PSA, you have to settle by the 22nd of October. That's because the revenue need time to go through all the calculations that are sent in. What can you cover? Well, whether the retirement gift counts as minor is always a bit of a moot point. Minor is a bit like the definition for trivial. We weren't sure before, and we aren't still sure. I've seen an example in the past where minor covered a holiday. So I think minor is a fairly generously interpreted word. Certainly, if it's one-off type things, then I think that this would be the ideal place to include those. And impractical means things where you may have taken everybody on a bit of a jolly and you don't know who had what in terms of the meal or drinks and so on. And so it's just too difficult to divide it up. It's better to put it on the PSA. But you can't include cash because, as before, cash is always going to be subject to tax and national insurance. And you can't include major benefits, by which we mean things like living accommodation, cars, fuel benefit, those kinds of things. So those have their own system for being treated, and you have to stick to that. This is the traditional time of year for the Christmas party, and there is specific legislation about annual parties. Obviously, none of us can get together this year because unless we happen to be in a family group in Tier 1 and Rule 6 applies, if that's the latest version, then You know, no one's going to be having annual parties, but they're only thought of that, and they have confirmed that virtual parties will be allowed. So the same exemption of £150 per head will apply. So that's employee and individual partner, whatever. So, you know, if there's two of you in a household, it could be for more than just the employee. It has to be available to all employees. Have they said, Claire, anything about employees at different locations? We think the same rule applies.
The same rule applies. So it's in different locations can do different events.
Yes.
And the same rules would apply for each location.
Yeah. So it has to be available for all employees or all employers at a particular location. As a fundamental, it doesn't mean everyone has to join in. You can be a party pooper, but you have to have the opportunity at least. You can provide food, drink, entertainment, any other costs that are involved in setting up this online event. And we've seen quite a lot of creativity, haven't we, online over the past few months of people doing quizzes on Zoom and so on. So all of that kind of stuff. And always remember that, as with all benefits, £150 is VAT inclusive. VAT is always going to be included in items that are potentially benefits in kind. Is there anything else that you can do? Well, work-related training, but just, I mean, it's a little tenuous to think of things where you would be rewarding the employee, but maybe if you were to send someone on a candle making course and you're not a candle making company, clearly that is just an entertainment for the individual employee. And I'm sure they'd be very grateful, but you need to put that on your PSA, and that wouldn't constitute work-related training unless you're about to launch out into a new business. Staff suggestion schemes are another area where you can give small benefits to people. There are two types of those schemes actually. There's the small one where they're £25 rewards, or there's a much larger scheme where rewards are finance related in terms of what you are saving the company. And there's a £5,000 limit, but that's an unusual scheme and the general run-of-the-mill type of thing. And finally, long service awards. So we've talked about retirement gift earlier. Actually, this might be a nice time to give long service awards if you haven't before, and find that they are at least tax exempt. So the rules, roughly speaking, are that you can't give someone an award until they've worked with the business for 20 years, and you can't give them another reward within 10 years of the last one. So you have to be a bit careful there. And there's a limit of £50 per year for each year that you've worked with the company. But nonetheless, you know, that this could be a good time to look at all the people you could give those sort of awards to and find a way to celebrate success, because those are kind of things that we all need, I think, for our mental well-being at the moment as much as anything. Anything else we can think of? So if you're a small business, it would be nice to think that any vouchers you give are going to also be from local businesses as much as you're able. I mean, sometimes that's just not convenient, but that's a good way of supporting the local economy. You might consider giving individuals a one-off bonus day of holiday. That is a nice way of recognising the stress everyone's been under from working from home. That's, I think all of these kind of things are important. I think making it personal is always going to be important, and that sometimes it's not even a gift that has tangible worth, but everyone's mental health, there's been an awful lot of talk of this year, and certainly I think we've all started to feel the strain. As the expression, we're all working from home, but it's a bit like living at work, isn't it, if that's the situation you're in. And you know, we're fantastically lucky in Tax Assist that we've carried on working throughout, and we're all very busy, and we understand entirely the privileged position that we're in, the kind of work that we do, that we have managed to carry on working throughout all of this. I'm very much aware that other people are not at all in the same position. So you know, we need to be careful to keep in touch with employees. It's a bit late down the line if that's already slipped through the net, as it were, but I'm sure that most employers are very aware of that, and have been taking steps throughout the year to keep everybody on board. Early payday. So this is another idea we had. You can pay early for Christmas. Some employers regularly do that. As ever, it's really important to ensure that you record the payment on the right date. Otherwise, it can adversely affect individuals' entitlement to universal credit, because it can push the amount they've received into the wrong period. So that's something to be very careful of, that the reporting for RTI is done on the normal due date. And finally, in terms of things that we have put forward today, working from home, there is a tax relief for individuals that many will already be aware of. It used to be £4 per week, but it was increased to £6 per week from the 6th of April. And it's £6 a week without needing to provide any invoices to show that you have incurred costs. It's supposed to recognise the additional costs of working from home, so inevitably having the lights and the heat on more, using the telephone if that's the case, using IT facilities. So all of that you can claim £6 a week without having to justify it. If you wanted to claim more, and actually it's surprisingly difficult to prove that you incur really significant costs. It may feel like you do. When you try and pin it down to something tangible, it's actually quite a difficult thing to do. But £6 a week you won't need to prove. You can't choose to work from home and claim the £6 a week, but there's been a lot of mention of this relief by the revenue, because obviously they recognise that coronavirus has seriously affected the way everyone's working, and huge numbers of us have been working from home for long periods of time. If your employees are not aware of it, it would be useful to bring this to their attention. They may even be able to claim tax relief on equipment that they've had to buy, like office chairs and so on. If they're the sort of thing that the employer would ordinarily have paid for, then the employee should be entitled to relief. We put the link on there to the website where there's some instructions. If you go to that link, you'll find that it asks you questions about, did you choose to work from home, or have you had to work from home? I think it may even say, is it because of coronavirus? I did look the other day, I forgot what it exactly says. But anyway, some individuals routinely do a tax return, and then you can claim this kind of thing on your tax return. But if you go onto this online form, I think it enables you to claim it online. And the third alternative is that you use the old form P87 and submit by post. So it's helpful to point all of that out to employees so that they can make that claim. Anything I've forgotten, Claire?
I don't think so. Just want to look at the questions. No, we haven't got any coming through at the moment, no.
Well, if anyone thinks of questions after the event, we've got some contact details here. So email queries in, we're happy to answer queries. And we're also happy to talk to people by phone. We've been doing Zoom calls with people, Teams, all those kind of methods. So if you have anything that you want to raise after the event, then do please contact us. Thank you for your time.